the jobs figure leads the market to tumble some more investors are now starting to get a little bit anxious around growth. What does this mean for the Bitcoin price? What does this mean for the rest of this year? Is there a chance that we get a pump, or are we destined for a big pullback? This is the question everybody is asking. This is the multi-million billion-dollar question. We're going to break that down and a lot more. If you appreciate these updates, smash up the likes. Do not forget to subscribe. Now we're going to get into the jobs figure, which did disappoint. 161,000 was expected by Wall Street. That figure came in at 142,000. But the devil's in the detail. And I'm not seeing a lot of people talk about this. It was also the double whammy effect. They also revised down the July figure as well. So the July figure came in at 114,000 at the time. They revised that down to 80-something thousand. It was 82,000. They revised that down to. So in other words, what does this mean? It means that there are fears around growth. We got to understand, there's a change of a narrative going on. Previously, if you're watching this video months and months ago when we were in our rate hiking cycle, when interest rates were going up, we were worried about inflation. And when you're worried about inflation, you don't want high jobs figures, right? You want jobs figures low. You want them suppressed. You want unemployment technically a little bit high to create that fall in wage pressures, which creates that fall in inflation. Now the market has shifted. Now the market is saying, no, we need jobs created. Why? Because their primary fear right now in this market is a recession. That's the whole thing right now. People have accepted that inflation has come down, right? It's a done deal. Fine, we're getting our rate cut. But Jerome Powell, are you only cutting because you saw that we're running into an iceberg, that we're heading towards recession? And I think this is the main bit that market participants are worried about. This is what keeps keeping risk off and is ultimately stopping our rally here on crypto. So it's important we understand what is the theme. Markets are always about themes, investing cycles as we know them, right? And right now, the cycle, the thing you're going to hear me and other investors talking about a lot over the next months and even 12, 18 months is, are we ahead of the curve or are we behind the curve? You're going to hear this phrase a lot. And in other words, this just means, is Jerome Powell managing a soft landing where he brings inflation down, he eases off the monetary policy, starts cutting, and he brings the aeroplane to a nice gentle landing on the runway? Or is he, like I said, coming in for a crash landing? He can already see the runway. He knows he's too high, too fast. And the fact of the matter is, we need to brace for impact because he's cutting rates too late. This is the main worry of the markets. And as you can see here, Bitcoin doesn't like it. Down another 1.7 or so percent today, 1.9% now at the time of recording, 3% down yesterday. It's not looking good. Now, of course, we've spoken about the fact that, is it time to panic? Do we need to worry? I'm going to get into that a little bit shortly as well. But from a jobs figure point of view, it's not a good look, right? It's not a good look because it shows that the labor market is not as strong as we previously thought, right? Missing expectations. That being said, does it suddenly mean that we're going to need a 50 basis point rate hike? Not necessarily, guys. Not necessarily. So the Fed meeting is on September the 18th. That's just 1 week and 5 days. Call it 12 days away from now. Again, we will be covering it here on this channel. So make sure you're subscribed. Make sure you're in my Telegram community as well. So as you can see here, 36% of the market are starting to price in bets that Jerome Powell is going to have to do a double rate cut, 50 basis points. Now, what does that mean? Is that a positive thing that people are asking? Because all this time we've been waiting for a rate cut, so why is it a bad thing if we get 50 basis points? Well, I spoke about this a couple of weeks ago. I said, guys, don't be surprised to see if Jerome Powell does 50 basis point rate hike, a double. Don't be surprised if the market's annoyed, it dumps. Because almost what they're saying is, oh, Jerome Powell, if you're having to do 50 basis points versus just starting off with a single 25 basis point rate cut, does that mean you're admitting that you've messed up? Does that mean admitting that you're behind the curve and that you're not in control of this soft landing like you were leading us to believe? So don't just expect, if we get a double rate cut, oh, that's good, we're cutting rates even more, interest rates are coming down faster. No, the sweet spot here is actually for us to just get a 25 basis point rate cut. Right? If we get that from Jerome Powell, he keeps speaking just nice and firmly, yep, we're on track, we're doing well, and we start seeing those labor figures start to hold where they are and not decline too much more than we've just seen today, then that's the nice soft landing. What we don't want is Jerome Powell to do a knee-jerk reaction, do a 55 basis point rate cut in the next 12 days, only then to see, the market's going to be panicking. Oh no, we're heading into a recession. Jerome Powell just confirmed it by doing a panic 50 basis point rate cut. Because typically a Fed official would want to do a 25 basis point first. If they were in control, they'd just do one, a nominal rate cut, not to even do anything, because 25 basis points doesn't move the market. It's more just to indicate, to signal to the market that we've officially started our pivot, we're officially starting our loosening monetary policy cycle. Okay, so this is the main matter right now. Is Jerome Powell, is the Fed ahead of the curve or are they behind the curve? Every time a piece of data comes out, job figure, CPI, retail sales, all these things, we're going to be looking for growth. Is the economy growing? If we see signs that the economy is stagnating, if we see signs that the economy is slowing down, markets will fall risk off. You will see the dollar index start to rise if we see that happening. Remember, dollar index signals whether things are risk on or risk off. We need it to move in this downward direction. We don't want it to play out the yellow arrow showing us to the upside. We don't want this here on dollar index. Let me zoom up to the weekly chart. We need to keep this firmly heading down here to this green line. We do not want this bouncing like it did last week. Last week was a big week for the dollar index, showing that risk was rotating off. We don't want that. We've had a good couple of weeks here before that, a month of risk rotating off. We want that. Keep this moving to the downside, keep risk rotating off. If we can do that, if we can see that scenario play out, that will hold itself well for Bitcoin, because ultimately here on Bitcoin, what is it we're looking for? We're looking for us to bounce from the ribbon, right? We want to bounce from this EMA ribbon. We know we're in this consolidation pattern. We know we're coming right into the depths of our weekly EMA ribbon, and it's important we start to bounce. And that can only come from risk rotating on. And it's perfectly timed with the FOMC meeting. 12 days time, just another week or two candles being printed here. We're going to get the FOMC meeting. Can it be the catalyst for the market? So you know what? Jerome Powell's got control of this. Or is Jerome Powell going to do the opposite? Is he going to show us he's got no control, that we're running into a recession, and in that case, be prepared. We could lose our EMA ribbon here on the weekly candles. We could close below it. We could be preparing for 45,000, 40,000, and reevaluating some of the levels. But right now, I just don't want to call for those levels just yet because we're still in a bullish pattern. And if you keep calling for bearish targets, you miss the bullish move. And that is why I'm still 2 feet in this market, getting ready for DCA opportunities like these. These are beautiful opportunities for me in the EMA ribbon. This is what I call the opposite of chasing green candles. If you're buying here versus the peak, you're doing yourself a great service. I mean, if we take the measured move here from the peaks where people were chasing at all-time highs versus where we're at now, you're buying at a 25% pullback, which on crypto is really nice. Bitcoin's becoming more and more mature. We've got Bitcoin ETFs, we've got Ethereum ETFs. This market is becoming mature. So when you see a 25% pullback from highs, you've got to ask yourself, is that enough pullback for you to be buying the dip? For me, yes. I like buying the dip in these areas. Doesn't mean we can't pull back more. Doesn't mean we can't pull back to kind of 30, 40% down at 45,000. It can happen, right? But that's part of the game. I've got to make sure I've got enough cash on the sidelines that if we do fall to some of those lower levels, not only do I not panic sell what I've got, but I'm able to accumulate some more. Ultimately, that is the game of crypto, right? Making sure you've got conviction that you don't panic sell and making sure you've got enough cash that you can buy at low prices. There's no point you coming in the market at 69 all the way up there, buying a ton of Bitcoin, you have no money left, and then the price goes all the way down to 15,500 in a bear market, and you're sat there twiddling your thumbs calling crypto a scam. Right? You're playing it wrong. You've got to be able to nibble. You've got to be able to buy those dips as well. When the price goes down, are you able to DCA? Not leave your cost bases at all-time highs. That's the most amateurish way of doing it. If you're making purchases at all-time highs because you FOMO'd in, you've got to be ready to buy the dip when it dips lower, when everybody's fearful, when fear and greed index is notching into those red territories. Are you prepared to back that up with money, right? With you buying funds. So ultimately, that's what we need to look for here in this market. We're focused on recession. Every piece of data that comes out, is it a recession? Is it a recession? Is it a recession? That is going to be the theme right now in this market. You guys have to be tuned into that. If you actively want to scalp trade with me, if you want to day trade and swing trade with me, ijazcrypto.com/TG. Join me in there. Thanks for watching, and I'll see you in the next one.